Can you hear me? All right, great. Thank you. All right, so you're welcome to yet another free webinar where we discuss our trading, discuss about our trading and how we can improve our trading. So today we're looking at the trader's code, how to trade with clarity, confidence, and control. We'll be looking at those three things. So what are the objectives? We're going to learn how to build a pre-trade decision-making process. So it's all about the process here now. We're going to understand how clarity and structure can help us have consistent results. And then we'll discover some essential questions that we need to ask ourselves before we take any trade at all. Okay. And then we'll live with that repeatable process. Okay. Because in trading, we must have a repeatable process so that anytime we see our trade setup, we are not doubting it. We are not hesitating. We don't have fear of missing out. We don't have fear of going into losers or going into wins. We just trade our setup following the process. All right. So let's look at why structure matters. It says emotion-driven trading leads to inconsistency. When you are trading based on your emotions, then today you may feel very on top of the world, and tomorrow it may not be that good. You are following your mood swings, right? And that would not give you consistency in the market. Secondly, we said random trades, they destroy our confidence and the trading capital that we have. When you trade randomly, yes, you may get 1 or 2 trades, or even 10 trades that will be profitable. However, by the time you are taking the 11th one, and then perhaps you even risked a lot more on that 11th one, that will then wipe out all the initial gains you have made. So trading randomly does not help us. Okay. When we are trading, we need structure. With trading with structure, a logical process, then we can build confidence and then we can have more control as we are trading. So the solution here is that we should have a clear process before any trade execution. That process must be clear because our minds, our brains, does not like ambiguity. It likes you to be clear. It wants you to know that if A happens, then I'll do B. Or if C happens, then I'll do D. So you have to follow that process. By the time you begin to mix and match, that A happens, when A happens, and then you switch that when A happens, you switch that, Oh, sorry, I think my other device is having an issue. Um, okay, so let me use this other device and okay. Recording in progress. Recording in progress. Recording in progress. Recording. Okay, it looks like the other device is come back on again. But the network may be a bit unstable. Okay, so let's try that again. So we are saying that you have to have a clear process. If A happens, then you will do B. If C happens, then you will do D. By the time you mix and match, so A happens, and then you do D, and then C happens, you do D, then you confuse the brain. It's wondering what is happening here, right? It will not be confident, especially when you have those losses as to what is happening. You then begin to have second hesitations and second thoughts or doubting whether this particular setup is going to work or not. Okay, so what is that trader's code that we're talking about? We are saying that the foundation is a trade plan. You need a trade plan. Just has been written there, you need a trade plan. And then once you have your trade plan, you need to define or find out or determine the direction of the market using a repeatable process. And that repeatable process must be a reason for your entry. So for instance, if you trade engulfing candles, once you see an engulfing candle, that is your trigger. That is your reason for an entry. So you know every time that you see an engulfing candle, you're looking to enter the market. Very important there. Okay. So let's break that down a bit. So in your trade plan, you have three essential components. So let me write that down here. Trade plan, you have three essential components. You have the strategy, your trade strategy. This one helps you identify the valid setups. It helps you identify valid setups. So you will have your entry, your stop loss, and take profits under strategy. The next bit there is your risk management. This lets you know how much are you willing to lose on that market for that day or for that week or for that month, right? You have to define that even before you take any trade at all. And the third bit there, the third component is that you need to understand your trader psychology, how you manage yourself, how you manage your emotions all the fear and perhaps focus, the discipline you need to bring to your trading. So particularly your emotions, because it's your emotions that trigger when you see something. So for instance, if you're in a trade, let's say buy trade, and then the price action is going further down instead of going up, right? It's going down towards your stop loss. So if it's going down towards your stop loss, oh dear. Okay. All right. So you might then get you might then you you might then get scared. That price is going to your stop loss. And then you decide to close the trade early. Only for the price to then, it doesn't hit your stop loss. It just goes up again. Right? And then you begin to blame yourself. Why did I close so early? Why didn't I just leave it there? You know, you begin to think, why did I do that? I could have done this. I should have done this. I would have done this. You know, so a friend of mine says, you're putting yourself in the coulda, shoulda, would have state. Right? We don't need that. With your trader psychology, you are able to trade with discipline and then identify those emotions and then trade in the right process. So why do we need that trade plan? It keeps us aligned with our trading edge. Okay, it reduces impulsive impulsive decisions. So you don't just suddenly see a price. Let's say you see a price moving up. So let's say you see a price moving up like this. So let's say you see a price moving up suddenly like this. This impulsive decision, the impulsive decision
Recording in progress. Recording.
Okay, sorry about that. This network is still just going up and down. Okay, let's see if we can make progress quickly before this thing goes off again. So that our trade plan helps us reduce impulsive decisions because you are trading according to the written down plan. You already, before you take any trade, you have that plan set. You have the plan written out. So it says it also allows you to review and refine your performance in the market. Okay. So let's move on quickly now. So that's the first that's the first pillar there. Your trade plan is very, very important. The second pillar is that you need a repeatable reason for you to enter the market. You must have a reason. So for instance, you could say that my reason for entering the market is whenever I see an engulfing candle. So let's say price has been coming down like this. Okay. So let's assume price has been coming down. And then suddenly you see an engulfing candle. And then you say to yourself, I'm going to trade this engulfing candle. Anytime I see an engulfing candle, especially when price has been going down, and then at the bottom somewhere, you see an engulfing candle, then you know that price will probably push up. Once you
a bit better. Okay, so let's try that now. So we are at the uh, emphasizing that we need a repeatable process for us to trade this market. Okay, now with this repeatable process, let me do. Can I expand this? Let me expand this to no, not that, not that. I don't have my trading tools. Where is my trading tools? Okay. Okay. So you need, I may not be able to draw on the chart, maybe use annotations. I may not be able to do that. So I'll just use the words as I'm seeing them and just describe what we're doing there. So the second pillar, so the first pillar is for you to have a trade plan. The second thing is that you need for you to be able to determine the direction, you need that repeatable process. So we talked about having an engulfing candle. So with that engulfing candle, you're able to trade. So every time you see, you're only trading engulfing candles anytime you see them. So once you see that, then you know that you can then build consistency. So a consistent objective framework to justify your trade. So this helps you to determine the market direction with confidence. And then it prevents emotional or impulsive reactive trading decisions. Okay. Once you are clear in your mind that I'm only going to be trading engulfing candles, for instance. So I'm just using engulfing candle. It could be break of structures, it could be support and resistance, it could be using RSI, it could be the MACD, it can be anything at all. But you stick to that one process continuously. That is all you need. Okay. Then it says the three pre-market questions that we need. So this is a very important one here. These three important questions. So the first one, this one acts like a filter before you take your trade. You know, it's just like the pilots who is about the captain in on the plane is about to take off. He usually has a checklist. He needs to go through that checklist to ensure that everything is in place. He checks that are the door closed? Yes. Is everybody seated? As the air hostesses, they might not be there. I'm just guessing what those things will be. You know, so I'm just mentioning some of the things. Have they done the safety drill? You know, to inform the people on board about safety and all that. Are the wings and the flaps, are they working? Am I getting um, connection with the control tower? right? So it can just be a list. There will be a list of checklists, a list of things that you need to do. So also with your trading, you need to have that list of trading objectives. Why do you want to enter this market? And that reason for entering must be consistent. Now, we said, so the first question you need to ask yourself using those reasons is the first question is, what did price do overnight? That's the first question. So whenever you get to your chart, you can say whether you say overnight or because I'm in Nigeria and I usually trade the London session. So I'll ask what the price do overnight because my London session is in the morning hours when I get to my charts. Okay. So I ask what the price do overnight. So if you're not in the in an area GMT area, maybe if London session is midnight for you, you could ask what did price do the previous session. Okay, so let's go on. Then the second question is, where is my last valid range or my last structure? That's the second question. You ask that second question, where is your last value? Because that first question, what did price do overnight, is either a clear directional move, which implies it's trending, a clear directional move. It's trending in one direction, which is good, right? Or it's ranging. It's just going up and down. You can't see a clear directional move, right? You should be able to look at your chart, within a few seconds, you should be able to say whether it's trending or ranging. Okay. Then the second bit, I'm sorry, the third bit there is, what must I see price do before I enter the market or before I execute a trade? So those three questions, you must ask yourself those three questions. Then once you're able to answer those three questions, then you are ready to place your trade. If you do not know clearly, settle in your mind what price did overnight, and you were not able to mark what your last value structure is. So, for instance, we're talking about higher highs and higher lows, higher highs and higher lows when price is moving up, right? If you're not able to determine where those points are, then you do not have any business trying to place a trade because you've not been able to determine what the direction is. And it's very important for us to determine direction of the market. Very important. Okay. Now let's look at another bit there. So in establishing what the market did overnight, right? We said you have to say, is it trending or is it ranging? Okay. This helps to shape our buyers and expectation for that session or for that period that we're in the market. The second question is, where is my last valid range or my last key structure? It says it helps us to identify the zones, support and resistance, maybe supply and demand, if that's what you're using, to determine the phase of the market. Okay, so are we in a pullback phase or are we in a reversal, possibly break of structure phase? So that's what the second question helps us to determine. And of course, the third question, what must I see price do before I execute a trade? It helps us to define that trigger. What is that trigger? Is it a pullback? Is it a break of structure? Okay. So if there's no confirmation, then there's no trade. So that way, you are following a structured plan. You are following a structured plan. It is clear. Okay. So let's go further. So it says this helps you build clarity, confidence, and control. So because you ask those three questions, you are clear in your mind what you should do. Once you are taking those trades over and over again, you begin to build confidence. You then begin to trust your system more and more, and you're able to control and avoid those emotional trades, those random trades. All right. So let's look at the live trader example. Can you give us uh, give me any chart that you like us to look at? What trade let's see. Okay, excellent question. Thank you, Billionaire Winifred, asking that question. That's an excellent question about if you should just trade only one setup. So give me one sec. Let me bring up this thing again. Then we'll answer that question. So excellent question there. We want to know if it's compulsory to trade only one repeatable pattern, like trading only the engulfing pattern, as you said. So you know, trading is a personal thing. So you need to decide what are you going to be trading. So you don't have to, but we found out that the important thing is that once you have it in a trade plan, if in your trade plan, um, right, okay, let me use this, let me reshare. I'll reshare this thing because I wanted to share. Okay, yes, so it's showing now. So once you have your trade plan and you say that in your trade plan, you're going to trade engulfing candles. So let's put it engulfing candles. Let's just say ENG. You are going to trade engulfing candles. You are going to trade break of structures, right? So you need to put it in your trade plan, list it out in like a checklist type thing. What do you need to do? What do you need to see the market do before you trade an engulfing candle? What do you need to see the market do before you trade a break of structure? Right? So it will be amongst those list of 3 questions that you ask yourself, but it's already in your trade plan. Once it's in your trade plan, then you can go ahead and trade it whichever way is most comfortable and most profitable for you. Okay, it doesn't have to be one, but we found out that for beginner traders, it's usually good to just start with one process so that you can monitor that process and see where are you getting it right, where are you getting it wrong. Okay, so that helps when you minimize the number of moving parts in your trading when you're beginning. But once you are very comfortable with that process, then you can begin to um, add other bits to it. Right. Thank you very much. Yes, that's an excellent question. Thank you. Okay. So let's look at uh, the breakdown of those 3 questions. So one, what did price do overnight? We want to establish is it trending or ranging? Okay, we've gone through this earlier. Um, so we want to see. So we said if there's no confirmation of those 3 things, then there will be no trade. And we said that this helps us build clarity. So in your mind, you are clear. Once you ask those 3 questions, what did price do overnight? Where is price now, or what is the market structure right now, and then what must I see price do before I execute a trade? Once you can ask those 3 questions and you can repeat those 3 questions over and over and over again, then you are following a defined process. Okay. So let's see. Okay, we're about wrapping up now. So do you have any currency pair you would like us to look at? Any pair at all that we can look at for you to do this to demonstrate this those 3 questions to see what is happening? Can you suggest a currency pair? Let's see. You can actually unmute yourself if you want to um, speak, or you can put it in the chat box.
Okay, hello.
Hello.
Please, can you hear me?
Yes, we can hear you.
Okay, maybe we would like to look at the Euro USD pair.
Good. Okay, so let's go to Euro USD. Excellent. So let me bring this. This is Euro USD. Do you have a preference for what time frame to look at?
I mostly look at the bigger time frames, then I come back to 15 minutes time frame.
All right. Okay. 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 So let me go to 15 minutes time frame. Okay. And let's see what price did today. So this is price action today, right? So let's do those three. So which sessions are you available for? Is it Asia session, London session, New York session, or the combination of the three?
I don't really remember the timing to the sessions, but
Okay,
it was
which
around.
region are you in? Are you in Nigeria or
No,
US, or which area are you in?
I'm in Ghana.
Okay, you're in Ghana, so it's not too far from Nigeria. So you're
Yeah,
probably able to trade the London session.
right.
Okay, that's good. Okay. So let's see what price did overnight. So price started from here, right? You can see what price did here. It initially moved sideways, then it broke structure there. Remember, some time ago we talked about price doing higher highs, higher lows. Okay, and just repeating that: higher highs, higher lows. So that's an upward movement. Okay, so if you have higher highs here and higher lows here, you have higher highs here and higher lows. Okay, so you can see price initially started out like this. It did not come back down to the lows here. Instead, it went up. Okay,
Mm.
so with that with this break of structure here, it's showing us a potential move upwards. Then it moves upwards. What does it do next? It then pulls back. Okay, so if you imagine like a zigzag type thing here, so it's done a higher high here, a higher high,
Okay.
then this is your higher low, right? So when you get to your chart, let's say you got to your chart just as it's breaking, because I actually saw this one this morning. I got to the chart just as it was breaking this high here. So I wasn't at my chart here. I was at the chart when it was breaking this second break of structure there, right? So I then said, okay, I want to see price. So I then said that my next valid range, since it did a break of structure here, my next valid market structure is that this is my next low. Okay, and I want to see price come down and then go up again. That's what I want to see, right? So when it started pulling back down, I entered some small lot size there, and I put my stop loss somewhere down here. Okay, and then price then just went sideways again for a little while, but eventually did another break of structure, which is very good for us, right? So we can see. So the first thing to ask when we started, when by the time I got to the charts here, the first thing to ask myself was, what did price do overnight? And my answer would be that yes, I saw a break of structure. Price pushes up, then pulled back down, and then broke structure again. So that already is telling me that price is in a trending situation, is breaking structure to the top side. So the mindset I'll have is that first, price, what did price do overnight? Price is trending upwards, or price has that potential to trend upwards. Secondly, I'll then ask myself, where is the last valid range, or where is the market structure? And market structure is simply marking your higher highs and higher lows and all that. That is all that means. So I mark that this is a break of structure here. So this is a higher high, the first higher high, this is the first higher low. So price then breaks this level here to give you another higher high here, and then possibly that is going to pull back to give you a higher low. But it doesn't pull back that deeply. It just does a very small one there and then pushes up, right? Then it
Okay,
pulls
sir.
back again. Okay, you want to ask a
Yeah, I wanted
question?
to. Yes, sir. I want to
Okay,
ask
please go
if
ahead.
if I didn't see the break in market structure earlier, can I just jump into the market and follow the trend? Like I know it's going upwards, but the breaking market, the structure, I didn't meet it early. Can I join immediately from?
Okay, you have to wait. So you remember we talked about your trade plan. So it's in your trade plan
Yes,
that
yes.
you're going to define how the market is moving. How would you know if price? How do you define if price is going up or if price is going down? How do you define it? Right? You need to write it in your trade plan. That, for instance, if I see price making higher highs and higher lows, then I know price is going up. If I see price making lower lows and lower highs, then I know price is going down. Or another person could say, okay, I'll just put a moving average there. And then they'll say, if price is above, let's say, the 50 moving average on my 15 minutes time frame, then I'll be bullish. Right? So, but whatever that trigger is for you, whatever that trade plan is, you need to write it down, whatever that process is, for you to have a sense of the direction of the market. You need to write it down. So if it's RSI or MACD that you use, or Bollinger Band, whatever it is that you use, you need to be able to define that, okay, for you to know the direction of the market, this is what I need to see. Right? So for me, I trade higher highs and higher lows. I trade market structure, and I define those using higher highs and higher lows. Right? So that's why I was defining it in terms of break of structures and all that. So you will need to define your own as well in the best way that you understand how the market is moving, and it can be any way, really. Because if you Google now and say trading strategy to determine direction of the market, you'll see 1,000,001 ways, right? And the good thing is
Or
that all those processes work. Most of those processes, they all work. It's just for us to be dedicated to just pick one process and stick with that one process. Okay. So once you get to your chart, yes. So thank you very much. So once you get to your chart, you then determine that, okay. So for me, I saw price here, and then I decided to enter the market there, and I had my initial take profit somewhere there. So now price has come all the way back down again. So perhaps I'm going to wait to see what market is going to do around this zone. So perhaps if it breaks this zone, I'll then begin to look for a change of direction, right? For price to then go further lower down, right? But you will need to decide for yourself what your own bit is. So in my own case, the first question was, what did price do overnight? It was ranging, and then it broke structure to the top side. That's what price was doing. Then the second question is, where is my market structure? So I said, okay, I have a break of structure here, so which means I have a higher high here, I have a higher low here, so I can see that. Then the third thing was, what must I see price do before I can execute a trade? And then that gave me that, the price gave me that on that movement there, on that small push down. So the what I should see my price do before I enter the trade is for price to pull back so that I can enter for a buy, right? And we see price do just that, right? And then it did that again here, break of structure, pushes up, then pulls back on this candle, and then pushes up again. Okay, so that is how we analyze the market, and that is how we determine um, what the direction of the market is. Using just simple market structures. If you are not comfortable with market structures, use whatever process you have. But the important thing is that you must be able to define that process for yourself. Okay? You must be able to define that process for yourself and write it down in your trade plan. Okay. The final bit here, just to say, in summary, this bit here. Okay, so we've just done a live example now. Is that your trade plan using your strategy, your risk management, and trader psychology? That's your trade plan. Then to determine direction of the market, you need to use a repeatable process, asking those three questions. That's what we talked about. And so when we apply these two things, when you combine the trade plan and this determining the direction, then you can then begin to see consistency. Okay, not from emotions, but from a structured perspective, you can see consistency coming in. Right. So this is just a tip of the iceberg of what we do in our Sky Vision Academy. And then if you're interested in doing that, we can post it on the platform once again for those who will be interested for them to join the next set of the next cohort of traders who want to learn even deeper. Okay, you'll be welcome to join us. We are on can look at the seller page there, which is seller.com, then 400 244. Okay, 400 244. Just look at it and see if you'd be interested. The next cohort starts in August, but if you sign up now, you can get access to the course modules. You can be reading up at your own pace while we then uh, prepare for the next cohort in August. Okay. Do you have any other question?
No, sir.
Wonderful. Thank you very much. I really appreciate your time here. So we look forward to having more people next time, and more questions from others as well next time. But it's really, really a great privilege to have shared this knowledge with you today. And I thank you for the questions that came through. We will post the recording hopefully maybe by tomorrow, hopefully, or later today if we can. Then we will then can have more reviews, and we'll also post the link for the Sky Vision Academy for those who be interested in joining that. Thank you very much, and have a lovely, lovely evening.
All right. Bye bye.
Bye bye. Thank you. Yeah.